You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rocking tune means it is time to gather together once again around the old option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you're just joining us for the first time, welcome. You missed quite a bit, though. It's been 10 years. Not 10 years of this program, but 10 years of the network. Easiest place to find all that goodness, the OptionsInsider.com. We keep threatening to make a best of available for you. We are going to do that, trust me. One of these days, when I get all my other projects sorted out, sometime in the next few months, we will get that best of sorted out for you. In the meantime, the archives are there for your listening pleasure. Also available, iTunes, TuneIn, Stitcher, so on and so forth. Also available via our mobile app, which is on iOS, Android, and the ever-popular Fire OS. And, of course, you can always join us live Monday and Thursday via Mixlr, 3 p.m. Central, 4 p.m. Eastern. Make sure you can do so if you're available. You like to hear how the sausage is made live. We can let you do that. Of course, you can ask questions there. You can ask questions pretty much however you listen to the program. So if you tune in a little bit after the fact on the podcast, you still want to set as a question, go ahead. We'd love to hear from you guys, too. And joining me on the old program today, let's see. He hasn't been on in a while, so let's start with him. Beaming in from the great Duchy of Maine, the Rock Lobster himself, Mr. Andrew Giovinazzi from OP, a.k.a. OptionPit.com. Mr. Rock Lobster, welcome back to the program to you, sir.
It is a pleasure to be back. I don't know, something crawled under Sebastian and he had to do all the shows last week or something like that.
He was a show
fiend. What happened to him.
Did you remember how this works? You got it back under you got your sea legs back under you?
I'm trying to. I had to listen to a couple of past shows just to make sure I could fake and know what I was talking about. I had to make it sound convincing. That's what I needed to know.
Got to warm up a little bit. You know, once you lose it, it's like not like riding a bike. You can forget it. So you got to practice a little bit, and you get back on the old pedals, and everything works good as new. Someone who never fell off the bike, though, except for occasional moments of being called away on assignment, is good old Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program. To you as well.
Always good to be here and happy to stay on that bike.
I say just keep swimming in the Dory movie. I will say just keep pedaling as we keep on pedaling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. Like the man said, this is a portion of the show where we break down what was catching our eye in today's activity in this wild and woolly beginning to the trading week. And of course, I am joking. It wasn't exactly the most scintillating of crazinesses. I'm actually looking at that would be the wrong thing if they said the S&P had that low. That would be kind of weird. No, there we go. That would be the right quote. Yes, they said 2,000 was the low. That would have been a heck of a day, but that was not the case. No, it was a pretty quiet day for the most part today, about an 8-handle range or so on the S&P, closing pretty much unched off like 0.25% or something along those lines. The Dow and the Qs following suit. With most of the major indices pretty much unched on the day. VIX cash inhaling a little bit after the weekend. You know, we had non-farms on Friday. It seems like vol took a bit of a break for the rest of the day going into the weekend, but now a new week is upon us, a new raft of earnings. Even though a lot of the big names have already popped off, we still have a number of names coming out. We'll get to those in a wee little bit. We do have, of course, this new administration, which continues to roil markets with every new tweet and every new executive order and executive action. And we do have the ever-lurking specter of the Fed and a lot of other things out there that seem to combine to, you'd think, juice this market up with a little bit of volatility. And yet, we did, as Russell pointed out on Volatility Views on Friday, we actually flirted ever so briefly with a 9 handle, the single digits in VIX land last week, which is kind of hard to fathom. Just given everything else that's been going on in the world, it seems crazy that we are. I'm not sure if it was Russell, if he was quoting someone else. He said something on the lines of, and I'm paraphrasing, so if I butcher it, I apologize, but something on the lines of Trump ain't no single digit VIX president, something along those lines, which I could kind of get behind that a little bit. That said, Mr. Rock Lobster, it has been a while since you've joined us, so we shall start in the Duchy of Maine. What's been catching your eye? What did you make of that quick little blip into single-digit territory in VIX land, as well as what else has been catching your eye in today's trading activity?
Well, I have to say it was brief. It was
it was quite brief.
I mean,
Blink and you missed it. In fact,
Friday,
it's funny. Sebastian and I both missed it. We both argued with Russell. Said no, he didn't. And then we had to go look and say, oh, yeah, you're right. It ever so briefly did go into the single digits. So it was that brief.
I don't think VIXMO did, but we did get the 9 handle. What's weird is I think the market is, he's saying lots of stuff, but, a lot of the executive actions, except for his first one, I think, it's still laws. He's like, okay, I'm going to see what we can do here, but he's got to go into the, which was the consensus building of trying to make Congress do stuff. So we'll see how it all goes. I don't know. But yeah, is he a single digit VIX president? I think his tone is friendly to business, although you never know. Sometimes he wants to, it's hard to parse. Like, I think net it sounds friendly, but I want companies to stay here, or I'll tax you if you go there. There's a lot of, I think at some point, people realize, well, it sounds like he's good for business, but I think part of the reason why VIX is where it is. There are some bullishness, but also at the same time, how hard it is to actually change things in this country, which, people that love them or hate them, whatever, they just still can't quite figure that out. That, there's a reason why we don't have a new immigration law in the last 10 years, because Congress and the president can't agree on one. So I think pro-business stance is a good change. Rolling back regulations, or some regulations, probably, the pendulum always swings. Probably swing too far the last time. We'll probably swing a little too far this time. But ultimately, the stocks have rallied, and the outlook seems brighter. So unless, of course, the Eurozone does something weird again, I have a feeling that they have intractable problems that the Brussels really cannot fix, because you just have a bunch of non-elected bureaucrats. Nobody really tends to like those people. The bureaucrats like themselves, but I don't think they like them. I don't think anybody else likes them very much. So I think that will be the next source of instability, because, I think that system has a hard time paying for itself. Ours can, if the Congress wants to, but I think Europe is still, they've got a lot of issues that they still haven't resolved. But they've done great at kicking the can down the hill, past the hill, over the hill, whatever, down the road. And we'll see. But as of right now, not much is happening, but that could change.
A lot could certainly change, and change is kind of in the air these days, both for better and for worse. Out there has an interesting time. A lot of the commercials in the Super Bowl yesterday were an interesting lot, not the type of thing we usually see on the Super Bowl, maybe perhaps reflective of just how divisive this time is in the political spectrum. We won't get into that, but instead we'll get into, crazy game. Maybe we'll have a question about that later or something along those lines. Should be kind of fun. But that said, Uncle Mike, big game aside, I know you're not a Pats fan. You're actually a fan of the Bills, which back in my day when I used to be cheering for the Pats were kind of like our arch nemesis. So maybe you took you were a little sad at the comeback last night. But that said, what's been going on in your world? What's catching your eye in today's market activity?
Well, in regard to the game, I mean, the Bills can say that they beat the Super Bowl champs this past year. So that's, I guess, a good thing for the Bills. But then they're with a whole new coaching staff. So it's probably kind of irrelevant at this point. But I do got to give props to Tom Brady. I mean, I don't see how he is not the best all time now. And with what he did yesterday in the big game, he was already, I think, arguably one of the best of all time. But with how he led his team back from a 25-point deficit in the big game, the way with which he did, I mean, I was just in awe of what he did and how the Patriots never quit. So my hat is off to the Patriots by all means. I mean, they did something for the ages yesterday. It was a very exciting game to watch.
You got to wonder, I didn't check any live betting sites or anything along those lines, but during the game, like towards the end of the third quarter, what must have been the odds on the Pats if you came in and did a live bet on the Pats towards the end of Q3? 10-1? I mean, it was something absurd that the notion that they could even come back from that kind of deficit. And maybe I should have been checking the odds instead of watching the game, but I was too glued, too crazy.
No, yeah. Sorry, Mike, go ahead.
It was something with which, going into the fourth quarter, I was very surprised with how it came about, but when you have a competitor like Tom Brady, you don't count him out. I mean, that's just something to say. So, with that being said, in terms of how the market's been doing today, a couple things. Overall, I think the quote of the year right now is the Donald Trump ain't no 9 VIX president. I think that's definitely got to be a very truthful statement, and I think that's one that we're going to be repeating a lot over the course of the next 4 years, quite frankly. So that's one area of it. So with that, some things with which I saw today, we have obviously not a large amount of movement in the market overall, but what we do have, and I was looking at this very quietly over the course of the last couple of weeks, I don't really have much to say on my silver trade, with which I know that, Mark, you were hoping for all sorts of adjustments and realignments and all sorts of fun things to do with it. But the only thing that I've been able to do is just look at it and smile recently just because it's been going up. So over the course of the last month and a half or so, the shiny stuff, both gold and silver for that matter, have really been doing very well. Now, what could that be a sign of? Could that be a sign of the fact that maybe one of Trump's tweets actually is doing something, the one that he said a couple of weeks ago, saying that the U.S. dollar is way too high right now and it is killing us, and I want to have more bearish dollar policies for monetary policy? Maybe that's it. Or the fact that it's just so low and more people want to buy it. That can be debated for many hours, quite frankly. But what has been happening that we have had some movement on recently is the shiny stuff. The markets themselves, if you just look at a chart of the S&P, we've been relatively flat for the last, almost 2 months. But you look at the shiny stuff, we've had a nice little rally in it. So I'm curious to see if we can continue to break out. I know that I'm going to have to start making some adjustment to the silver trade at some point, but just as like a profit protector in some way, just because it's gone up way quicker than what I had expected it to go up. But that's not a bad problem by any means. The other thing that I think that we can actually take a look at today, let me bring it up here on my screen, and that is, we've talked about the shiny stuff. Well, why don't we talk about the slippery stuff? Oil actually got beat up pretty badly today. Not pretty bad. We just had a down day today. It's down a little bit over around $1. But with that, we have been having a hard time continuing the rally past the low 50s. I mean, are we going to hit 60 in the near term? Are we going to actually just pull back to the 30 level? Who knows with that? But I do think that in looking at the shiny or the slippery stuff, that's another thing to make note of. Final thing that I'd like to make note of as to what was catching my tape today, or lighting up my tape today, is the relative non-movement of natural gas. We've had a relatively mild winter throughout the country, and I'm actually surprised that we're still at these levels that we're at with natural gas. If we continue to have such a mild winter, I have to say, I could see natural gas coming down a little bit more. Now, of course, there's other factors involved. We have the Dakota pipeline. We have what's going on in the Middle East. There's a lot of other factors. But the fact that we've held the levels that we have held, even though it has come down over the course of the last month, I'm surprised we haven't come down more in the natural gas arena. So that is what's lighting up my tape today. It's kind of a stretch in that we're talking about it, but hey, at least I'm not talking about the Mexican peso this week.
We'll have to have you guest on our TWIFO show one of these days, Uncle Mike. We talk about a lot of that good stuff, volatility skew, levels of vol, and things like WTI. Now that's the thing, you got to trade the big babies though to go on that show. You can't just trade the USOs and the GLDs and the SLVs. You got to trade, the WTIs and the COMEX Gold and all that fun stuff. But we'll see. Maybe we can make an exception for you on that program. We'll see. I'll have to speak to the higher ups on that one and see how high up that goes on the food chain on that one. Meanwhile, let's roll on over to there are some names popping off after the bell, not a ton, some near and dear to us here in the space. Cboe coming out after the bell. I believe that's a change for them. I thought they used to be pre-open before the bell. I do believe this might be the first time they're coming out after the bell. I'll have to check on that. If not, it's a relatively new phenomenon. But they're popping off after the bell, closing about 77.80, off about 0.5% or so in at least the intraday trading today. This name's been pretty light, and today pretty light as well. It's been averaging about 1,700 contracts, and going into earnings, only about 1,300. They were pricing in, looks like about a 3% move out here in the after hours. We'll see, or in the earnings as a whole, we'll see how this price is up. Doesn't seem like anything has come of the earnings as of yet. It's still pretty much unched, so perhaps the conference call taking a while to digest. That's always one of the more nuanced names to come off during the earnings season. I think they still hold a record for my, earnings season is pretty much excuse season. Everyone's going to give an excuse why they're missing their numbers, unfavorable currency rates, blaming Trump, whatever the case may be. Cboe blamed the VIX futures term structure. I wish I could have been on the call for that one. I wasn't, unfortunately, just to hear the crickets and the quote unquote blank faces from the analysts and the reporters on the call who had no idea what the hell he's talking about. So that might be my favorite for the most esoteric excuse ever cited yet in an earnings call. Speaking of numbers, we didn't get a chance to get to it last week. We had some rip-roaring shows going on with all the earnings popping off after the bell. But we do have the numbers from January for an overall breakdown of how the options market looked. And surprise, January kind of weak. You have to view that in context, though, because January was 2015, I should say. January 2015 was, as we all recall, or January 2016, I should say. Last year's in the January was just a rock'em sock'em robots. We came out of the gate just shocks to the system after shock to the system. China, the Fed, a bunch of other things kind of just conspiring to keep that volatility ball rolling and churning all the way through mid-February. So we had a month and a half of a very tumultuous period. So I think in hindsight, anything would have seemed pretty weak, and certainly that's what we got this January, with overall volume down, courtesy of our friends over there at OCC, the Options Clearing Corporation, who take the other side of all these trades we're talking about, so they would know. It was off about 9% in January of this year from last year. So it's pretty bad. ADV also down quite a bit. Of course, average daily volume down 14% from January of last year, about 16.9 million contracts. Listed options, they clear a bunch of stuff there, so those total numbers include a few other things, futures, stock loan, etc. Listed options overall was down about 10%, 328 million contracts in January. Equity options, breaking it down a little further, was 291 million contracts of that, so that's an 11% decrease from January 2016. Cleared ETF options volume was 123 million contracts down 20%. So again, that shows you how much action there was in the broad indices, which makes up a lot, and of course the metals and other things that makes up a lot of the ETF volume that OCC clears. And index options volume down only 4% from January of 2016. So still a decent spike there for good old OCC when it comes to indexes. And really quickly, I'd be remiss if I didn't mention, of course, the looming specter of the Snapchat IPO. A lot of people out there asking, hey, what's going on with this thing? When's it going to be able to trade options? This kind of reminds me back of the days of Alibaba and everything else when we had the Viceroy on the show. And we had to kind of explain, you have to wait for the IPO process to happen. Then a couple of weeks down the road, maybe, if you're lucky, you can get options, if not usually a little bit longer. There's a bunch of other things that have to go into play to make it optionable. So we got to wait for the IPO, then kind of go from there. But still interesting stuff. So a lot to sink our teeth into. Teeths collectively on the old program. Maybe we'll start with you, Mr. Rock Lobster. Anything jumping off the head at you either at those options numbers or perhaps the looming specter of SIBO earnings or the Snapchat IPO? Any of those really coming to mind for you?
Well, the biggest one was Snapchat. Is they're trying to get a $25 billion valuation for it?
Yeah, it'd be the biggest since Alibaba.
I know, and it's I don't know if I'm right, but I think I might be, but maybe I'm wrong, I still think Twitter has a wider reach and costs less money. And I know they're not exactly the same, but it feels expensive to me. That's all. As far as SIBO goes, the term structure, the only thing I can think of SIBO is I guess I could have bought a seat in, what was it, 92 for $325,000. I think those seats are worth 20 times.
I'll have to look into that because I talked about this before, I think, on this program and other people in general. Those might be one of the best investments in recorded modern history, not just in the price improvement that you've had, which has been many X, but the rent. People forget about the rent. I mean, when I was down there, I was leasing these things for 15 to 20 grand a month, and I know a lot of those guys I was leasing it from had bought them in the 70s and 80s for not much more than that, Yeah,
exactly.
So
for what?
They were getting like 30 to 40% of their purchase price every month in a lease, on top of the fact that the thing was appreciating 10x every few years. I mean, it's in terms of the annals of good investments, that's got to be up there.
Just nobody got it. And I know because coming from the PCX, it took me a while to make my money back on that one when it eventually got bought out. But we didn't even get the equity. They just bought it all out for cash. If we would have got the equity to hold, it would have been worth a lot more money when Archipelago got bought out. But anyway, they got bought out, but then they got bought out by the NYSE, and then now it's 15 years later and what that equity is worth. So anyway, long-term investing, I guess, if you buy cheap enough, that's what you're looking for bargains. So I think that's it feels like that's a tale of two things, where the SIBO kind of a slow build in value, and now Snapchat comes out, it's $25 billion. And I think it will trade. It will be a trader. It probably will follow the same patterns of Twitter and Facebook, where everybody gets really excited about it and bit the crap out of it, and then there's sadness for a while because eventually they have to start monetizing. So it depends. If their management team was agile like Facebook's was, the trip down, I mean, hard to believe. Facebook was a $16 stock and nobody wanted it. It was the worst IPO of all time and all that kind of stuff. So, I would say, let the dust settle for Snapchat and see. But maybe it's the one IPO that goes out at $25 billion and goes straight up. I think if you look at Alibaba, it's not too far away from its IPO. Where did IPO? Like $70 or something like that. And I know it traded darn close to that price again. So, these fully valued IPOs, I'll just say they're a fully valued IPO.
How charitable of you, a fully valued IPO. I like that. No room for edge to the upside. It's fully valued. It's coming out fully valued. I like that.
Like, boom, $25 billion. I know we don't have any real, profits yet, but it's going to cost you $25 billion to ride.
Well, they often say, they wait to sell it to the ultimate sucker, and that often is the retail public. When they're foisting valuations like these on us, then perhaps there is some truth to that argument. That said, Uncle Mike, before we roll on into the odd block, anything popping off for you? SIBO earnings, OCC numbers, kind of appalling for January, but perhaps not a surprise, or the looming specter of the Snapchat IPO, sir?
not a surprise on the OCC numbers with the 9 VIX, or not the 9 VIX, but with the lower VIXs we have and the lack of movement with which we've had in the marketplace, not a surprise on that whatsoever. I just remember last year, back when the world was going to, I think it's been almost a year since the world was going to end most recently. So I guess that's good that we've gone a whole year since then. But I remember we did have very higher numbers then, just because of the larger movements in the marketplace. In terms of the IPO, that's one I will not be participating on. But maybe if it does have a dip like what Facebook did, then what the heck, we'll take a look at it. So nothing aside from that, but looking forward to hearing about the odd block.
I'm looking forward to it too. So without further ado, let's get rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, that music means it's time once again for the oddest, the weirdest, the strangest part of the show, aside from when Andrew comes on, of course. It is indeed time for the Odd Block, the portion of the program where we break down the weird, the wild, the wonderful, the head-scratching, the bizarre, the twisted paper that is catching our eye in today's options market. Going to kick things off, Mr. Rock Lobster, with a name I'm not sure, might be familiar with this one. I think I may have heard of it once or twice. VIX. I think it's V and 1X, or maybe V and 2X's. Have you heard of this name? This VIX. Is that how am I pronouncing that correctly?
I believe it's VIX.
Oh, okay.
Yeah,
I thought I was close.
Something like
I was
that.
close. I think it's Dutch or perhaps Norwegian.
Actually, you know what? We know it. I know why it's confusing, Mark, because we know it by the phrase "reliably crappy." We actually don't say VIX. we just say it's reliably crappy.
Predictably crappy name here.
Predictably crappy, exactly.
The old Odd Block. Yes, of course. We are talking about good old VXX. This is the VIX short-term futures ETN, if you're somehow unaware. We can't talk about this on actually volatility views on Friday. Check it out. Hit the network this morning if you missed the live stream. And it's kind of amazing, even to this day, that just how much mind share and market share these VIX and related products have generated, particularly with the retail public. I mean, a product like VXX, it just seems so obtuse to the average retail person, yet in some days it's the single largest exchange traded product by volume. So go figure. Who ever would have thunk it in a million years back in 2004 when they were cooking up the VIX futures and the options coming down the road that this would happen? I don't think anyone in a million years foresaw this, including myself, and probably not the SIBO. All right, let's get into what was popping off, though, today out here in VXX, closing 1880, pretty much unched on the day. Is the name that does, like I said, some pretty decent paper. Not so much today, though. Average is 266,000, so over 250,000 contracts a day. Doing about 231 today, so a little bit shy on the old overall volume side. But that wasn't what caught our eye today. Nope, it was a roll. Ratio, I guess you can call it actually more of a ratio spread / roll than just a straight up roll. It was the Feb 20, March 24 funky ratio diagonal. Let's call it that. It sounds a little bit more fun. Funky ratio diagonal. Going up when we started the day, 30,000 by 20,000 times. Ended up the day 28,000 on the March. And let's get the final tally here on the Feb, which was 42,000. So a decent chunk. Worth noting, about 49,000 open on those Feb 20s, so that's why we kind of think it has all the hallmarks of a roll. By the way, they did it for 35 cents, over 50 cents there, 35 on the Feb, obviously, 50 cents on the March. The initial chunk went up in 2 blocks over there on the ARCA. Looks like paper coming in to buy out the Feb and then sell the March, so it seems like we got a bit of an overwrite going here, and he wants to keep the party going, and he decided 20, it was getting a little bit too close to the flame, maybe, for his tastes, for his purposes. So he decided when he reestablished out in March, he wanted to go a little bit higher, a little bit safer, to the 24 region. And he did it for size. About 12, nearly 13,000 contracts open on the March 24. So clearly opening paper there as well. Interesting stuff here. We'll have to check again all the open interest to make sure. And looking back, of course, as Andrew alluded to earlier, this is the name that we've referred to many times as kind of predictably crappy. And why do we say that? Well, it's because if you missed any of our other programs on this topic, VXX tends to erode relatively predictably, and it does so aggressively and again reliably. Long-term leap VXX puts are probably one of the best long-term investments, reliable long-term investments you can make out there in the marketplace. Kind of set it and forget it. Put it in your IRA, come back in a few years. Oh, your kid's college is paid for. Hallelujah. So yeah, VXX and it erodes due to the nature of the futures term structure. Obviously, that erosion is going to change based on the nature of the term structure. Just ask our friends at the SIBO if you want clarifications on that during their earnings call. But still interesting stuff. So let's start it off. We haven't done VXX, I don't think, in a while here on the Odd Block, Mr. Rock Lobster. So let's start there. What's your take on our friend keeping the party going, but kicking it up a few notches, at least away from the fire a few notches here in VXX?
This is one of the famous ones where it's not totally easy for me to figure out. I mean, I try to. This is what I think they're trying to. It looks like, obviously not obviously, but the March is opening, right? It looked from the pricing definitely a sale. For our listeners, I define a sale when something's like on the bid, through the bid, because as Mark and I know, market makers they don't like buying things through their own offer. They like buying things below the bid.
Are you going to buy it below my bid? Oh, sure. Go ahead.
All right.
I'll just get out of your way. I'm just standing here like an idiot. No problem.
So there's ways that things trade on a floor, and most of the odd block paper is hand executed paper, so means old school type. On the other side, that Feb, there's plenty of open interest on the Feb. They could be buying it back, and so at the outset, I would say, okay, it looks like a standard roll. The thing that changed it a little bit for me was there's a ratio. I think they're buying 30,000, selling 20,000, if I'm not mistaken. So it feels like it's about premium neutral, which normally would mean when you're trying to set a trade up like that, you set up a premium neutral diagonal. You want to be long that front month and short the back month. That way, if the market rips up, they're gonna make a fortune, obviously. But if VXX keeps being predictably crappy and Trump actually does become the 9-handle president for the VIX, the March premium will pay for a good chunk of the premium that they're getting smacked on in February. So if that's a pretty, they only have 2 weeks for something to happen. There's not much on the calendar. So, it's most likely a roll, but that ratio, I want to say there's a delta, maybe 20 delta that they're specking on a pop and vol because, they're picking that 20 strike, which would have been an aggressive sale. 2 weeks ago, VXX was 21. So it's right there on it. So the problem is one way wants a rally and the other way is just, rolling a short call. So they're diametrically opposed trades, unfortunately. But a tough one. The easiest way, I guess, to look is just tomorrow, the open interest on the Feb. When listeners hear this, it will be today. So you check the open interest, and if the open interest really ballooned, it's what I would say opening bullish VXX trade, which has been a tough trade for the last 2.5 months.
Yeah, this guy's got some, he's got some cojones, shall we say, going upside on VXX. It's funny, I kind of caught myself. I started doing what I normally do, which is I pull up the chart and say, let's look back at the year that was on VXX. And I said, wait a minute, this is VXX. I know what this chart is. I looked at it. Sure enough, that's exactly what it was. One straight downward line direction, essentially, with little bits of change in the slope. No real need to parse the chart there on VXX. Predictably crappy, as we said before. But again, it's predictable, so that makes it somewhat attractive if you know what you're looking for. All right, let's move on to the realm of let's go mobile. Let's go to T-Mobile. In fact, good old T-Mobile Inc. ticker symbol TMUS. TMUS. It's a very, very good, very quality ticker symbol there. TMUS. Not a huge fan. All right, closing today, 60, just about 61. A couple of ticks off, $61 here, off about 0.5% or so on the day. It wasn't underlying that really attracted us, though, here. It's named doing about 8,700 contracts a day, doing about 8,700 today. So again, wasn't overall volume that caught our eye out here either. Any schmo can go look for the overall volume and say, well, volume is up, the underlying's moved 30%. Let's see if the options move. No, takes a little bit more work than that sometimes, listeners, to find the interesting nuggets that we have in store for you. And today we're going to have out here in TMUS, if I could scroll all the way down. For some reason, my scroll does not want to play well. There we go. We're looking at all the way out to March, and it is the March 60 puts that caught the ear or the eye of our friend here today. Paper lighting them up, starting off, gobbling up about 6,000. It looks like, again, paper buy-in probably, paying $2.29 for those. Looks like one block over there on ARCA. Mark spread, no other side to the spread, but we did see some stock, just about 250,000 shares or so going up, which would be close to delta neutral on these bad boys. It's interesting. It is worthy of note, though. There's pretty much one strike anywhere around here that has any OI on it. And guess what? It's these March 60 puts. So whenever I see that kind of thing, it kind of gets my spidey sense tingling that maybe our friend could be deciding to get the heck out of Dodge here. Let's see if I can pull up this strike really quickly and see if I can see when this open interest was open. Yeah, this was open. Looks like about January 31st, February 1st, right in that time frame. We saw a big chunk going up right around there, and it's about 6,000 and change. So looks like our friend opened it around then, and over that time frame, we have seen, let's look at the chart here in good old TMUS. It has been a slow and steady increase. It did pop up as high as about 63, almost 64 last week before settling back down here into the 60, 61 range here again. So interesting stuff. If he was looking here to close, then perhaps interesting timing may have been a little bit better to do it a week ago. But then again, you never know with these things. Sometimes you got to get what you can get. And you don't get upset, as my little guy's gym teacher would say. All right. That said, Mr. Rock Lobster, are you getting upset at these puts and stock here in TMUS? And are you like me? Are you on the closing train, or you think our friend's just throwing more flame on the fire here, or more fuel on the fire?
More fuel on the fire. And mainly we try to throw fuel on the fire, not more flame.
More flame would be interesting.
Be careful, because you don't want it to blow up in your face.
I like just throwing flame wherever I go and just see what happens. Throw some fire into a room, see what happens. It's exciting.
Like an X-Men kind of?
Yeah,
I'm just going to
I
throw
could go
some
for
flame
that.
around.
I could go for that.
So what we've got is, the one thing about T-Mobile, right, there's like takeover talk, and there's some movement in the telecom space and this and that and blah, blah. So the vol's pretty high. So if you're buying that back, if you sold puts in stock, I could see there's a case maybe you made some money, but you're paying a pretty hefty premium for it. So overall, so the trade as it printed looked delta neutral with the stock. So my big question is it looks closing, probably is closing. Again, to check the open interest on this is on a day when there was nothing happening. There was mostly, I find, trades that are kind of juicy to look at. But I question the wisdom of closing this at the high vol, but maybe they need to, just because of all the action is making them a little skittish. Maybe they don't want to be short puts in stock into the takeover, or any kind of corporate action in T-Mobile. So I think I can see the reason for it closing, but somebody's paying up if they are. That's my line, and I'm sticking with it.
Yeah, that's kind of what threw me on that a little bit, too, when I first looked at it, because it has all the other hallmarks of closing. Like I said, my spidey sense is tingling. That tells me usually it's closing. But you're right, timing-wise, not opportune. So that's kind of why I was maybe hesitating a little bit to say it was closing. I was being charitable to our friend. But, yeah, you're right. Sometimes you don't get to choose when your trade closes. Sometimes your trade chooses to close on you or your risk manager, something along those lines. So if that's the case, then sometimes, again, you can't always pick the optimal exit. And if that's the case here, then clearly our friend did not do so as well, but he's probably still did all right here in TMUS as we move on into our final name, moving away from TMUS into the land of cars and car dealers. This is True Car Inc. Ticker symbol TRUE, TRUE. I like it. Nice, straightforward, relevant ticker. Gets a bonus point in my book. TMUS, not so much. Not liking that one. All right. 13.5 was where it closed today, right about there, up about nearly 2%. So a decent little rally ho day out here in True. This is the name that does about 18 to 1,900 contracts a day. Doing a whopping 17,000 today, 209.7 to 1 calls over puts. That's nearly 17,000 on the calls and 80 on the puts. So if you're wondering what caught our eye, yes, it was those 80 puts. I confess. No, it was the calls, of course. In particular, the April 12 half. Someone clearly's got an axe to grind here, Mr. Rock Lobster. Interesting stuff. Or at least they had an axe to grind. We can get to that maybe in a minute. Huge open interest on this strike. Well, I should probably tell you what we saw again first before we get into that. We saw the April 12 halves. Paper lighting it up today to the tune of 6,400 to start with. Paper selling looks like for $1.35. As the day went on, a total of 13.5 went up. Again, looks like paper selling. Maybe some mixed trading later on. Some cheap call scoopers coming in a little bit too, maybe distorting some of those numbers. But overall, this looks like it appears to be size overwriting activity here. And what I mentioned is there's tons of open interest here. It kind of leaps off the page because there's no other strikes that are even remotely relevant anywhere near it. And then you have all these strikes with 14 contracts open and 334. Then bam, 80,000. It kind of jumps off at you that someone has a bit of an axe to grind on this particular strike. The strike selection is kind of intriguing if this is indeed a continued overwrites because, like I said, it's closed at 13.5 today. So these are $1 and change in the money now, or close to it. And this name has kind of been in extended rally home mode. It burst through that 12.5 level, right around, let's say, about the end of December. So this guy's had over a month now to decide what strike he wanted, and apparently still likes this. Not to say in the money calls, we talked about this before, in the money overwrites are not a bad thing by any means. It could give you a little bit more juice. You're kind of trading more with a little bit of a put wing pop to the vibe. That could be to the trade. That could be a little bit more attractive to you, particularly if the upside call is not getting a lot of love from a volatility perspective. I know a lot of guys who like to do all their call writing in the money strikes. That's kind of where they like to play. So it makes sense. It's just not something we see that often, let alone for this kind of size and these kinds of names. Again, looking back, it's been an interesting roller coaster of a year, getting as low as south of the 5 handle into the 4s back in February of last year before inexorably rallying and rising, like I said, all the way up to where it stands right now, 13.5. Interesting stuff, Mr. Rock Lobster. What's your take on these? Kind of some of the mixed paper going up on this strike, and apparently our friend here keeping his axe sharp for the 12 half strike.
Yeah, I'm looking at this. I saw a huge amount of these things go up. I think in November, and it looks like they were writing the paper just real aggressive overwriting on the strike, and the strike price that was about $1.60, $1.65. And now they're trading around what, 130, 135, 140, and the market in the morning, was 35 cents wide, and just paper came in and just started hitting the bid like whack, 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 whack. That's sold. Usually that means there's a lot more to come as far as the selling goes. So the only thing I could think of is that it was a, the stock is up a bunch. It's one of those, what is it, a ride-sharing thing or some kind of bizarre car company, I don't know, that are kind of annoyingly all over Chicago. Oh, I'm going to borrow this car. But I think somebody is trying to just take profits in an underlying equity position. They're just writing these calls till the cows come home. That's what it feels like, I'm going to say. That's the feeling. And they're not done.
You got the feels, huh? Done. You got the feels on this one?
I think so. That's what I'm feeling. Like tomorrow, I have a feeling we're going to see open interest when our listeners see this of over 100,000 contracts, because it just like all the pricing, all the action looks sale until it got so cheap. I mean, you think about, look at that strike, and they were trading for like 30 cents over parity or something like that, or 40 cents over parity for a March contract. That doesn't sound like very much in a little stock like that. So, there's always a reason that things trade how they do, but I found it odd. Let's just say an aptly named trade on a day when not many things were going, or not many things were actually very interesting overall.
Yeah, interesting stuff. That's an interesting one. I'm gonna mark that one in our to be watched category. There we go. Gets the big golden star. There we go. So we'll keep an eye on that one to see maybe if you want to check that one again. Meanwhile, it's time for you guys to take the reins. It's Monday. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Welcome to the Mail Block. This is indeed the portion of the show where you guys just doing some live tweeting here while the man was talking. There we go. So you guys get to take the reins with your questions, your comments, your insights, and interesting stuff here. Of course, last week, really quick, we'll finish up last week. We said who's going to win the straddle battle for the earnings last week? Would it be Apple, Facebook, Amazon, or Chipotle? Who would outperform by the largest measure? Outperforming does not seem to be the narrative of this earnings season. This is one of the more underperforming from an earnings volatility standpoint that I've seen in quite some time. So net premium sellers doing all right, even though some of these names perhaps vacillating a little bit intraday. So if you're savvy with some of your gamma scalps, you could maybe do all right, even if you're buying a lot of premium out here. A lot of you guys picked Amazon to outperform the most. Amazon flirted with their straddle ever so briefly, but actually opened up well within their range. It was, surprise, surprise, Apple, the one that we said was the cheapest there from a vol perspective, certainly compared to historical, that actually was the actual outperforming winner, even though you guys chose Amazon. Number 2 was Apple, and tie for number 3 was Facebook and Chipotle. This week, we turned our attention away from earnings into duration. Now, you guys are asking us about a lot of different, different types of options that are available out there and time frames and things. And it got us wondering, what do you guys really like to trade? I kind of have a feeling, I think, where I know you guys fall on this, but I always like to see it for myself. So we asked you guys this week, with so many different options expiration cycles available, weekly, monthly, etc., which duration do you prefer? And we gave you, so longer than a month, because it's not just monthly. You can go out there into the leaps or 3 months or whatever the case may be. So if you like to play 3-month overrides, for example, that would be you. Or monthlies, a lot of you guys play in those as well. That was the only game in town until a few years ago. Weeklies, now kind of the new rage in the options market. Or get a little bit more aggressive, you can get daily. That can take a bunch of different forms. You could, or intraday, you can put an intraday in there as well. So you can trade, scalp your options intraday, or perhaps you're trading these weeklies that are expiring essentially today, or these Monday and Wednesday weeklies. You're kind of getting a lot of daily action kind of getting up on your horizon. Of course, as always, the Nadex and their little binaries over there as well. A lot of ways you can play intraday short duration options as well. So I'm curious what you guys are thinking, but I will start with my cohorts here. Let's start with the Rock Lobster. What do you think is winning our little duration battle here? The weeklies, monthlies, longer than a month, or daily/intraday? And what is your pick? What is your pick? Where do you play?
I'm going to say the weeklies, and I'm going to say everybody else is going to say the weeklies too. They're way too popular right now. Weekly. And
that's where you play too? Weeklies?
Double. I do a lot of time spreading, so it's kind of monthly, weekly.
Yeah, so, there was no slot for monthly, weekly within the four.
I know. So
within the limited slots weekly of Twitter. Yeah, the nuance sometimes is lost.
Since I do one monthly and then you can do multiple weeklies, I'm going to go on the side of weekly. I'm going to take the most active side. There you go. How about that,
Mr. Uncle Mike? What are you feeling, sir? Monthly, longer than a month, weekly, daily/intraday, and then where do you play for your clients?
I gotta agree with the Rock Lobster on this one. Weekly.
Interesting. And the results so far are interesting. Again, we just posted like an hour or two before the show. We got all week to vote. The early results, I will have to say, are surprising. I was kind of leaning the way you guys were, which is all weeklies all the time, to just on the frequency of what you guys write in with. It'd be all weeklies. But you guys ready for these results? Okay, number one with the bullet, 50%, so half of respondents so far, saying monthlies.
Really?
Yeah. Surprised the heck out of me. Then, number 2, 30%. Longer than a month.
Really?
So 80% of our listeners, at least according to this, a month and beyond, right now. If I were to extrapolate
I just found
these
my
early
next
votes.
webinar.
There you go. You're welcome. You're welcome. Month in Trading Longer Term Options for Fun and Profit by Andrew Giovinazzi. For juice for free, longer term. Yeah, so that kind of surprised me. 80%. Only 17% voting for the weeklies. I could also chalk that up, but this is still early days. We got days left, so maybe some people haven't had a chance to vote yet, clearly, because I got to imagine the weeklies are going to start charging away here eventually. But that at least initially, maybe we got some in an institutional Vega traders there in the responding early in this one. I don't know, but longer than a month and monthly taking the charge, which is very surprising. You guys haven't voted yet. At Options, you know how to do it. You got all week to do it. It expires the end of the week. Hence our question of the week. Let's get to a timely, kind of silly one here. Comes from Intuit. Maybe they're into options. I don't know. But they want to know, why can't I trade options on the Super Bowl? Pats calls for the win, baby. I feel you there. I'm an old school Pats fan. If somewhat of a lapsed Pats fan, I haven't really been into them in recent years. I go back to the old school days when they were red and terrible. Those are my Pats, not this new dynasty. I don't know who these guys are. But that said, interesting question. We get these around big events like elections and sporting events, things like that. Why can't they trade these event-type options? The long answer is you can kind of do it with a lot of these, over-the-seas kind of sites that offer some sort of limited, quote-unquote, derivatives functionality. A lot of it is on the futures. I don't know if a lot of them also offer the options on the futures. That said, the short answer to this is you can't, because the regulators here in the States are kind of loopy and dumb, and they don't understand these marketplace, and they kind of try to limit this to sports wagering to these ridiculous offshore sites or to these stupid things like DraftKings that are kind of just, as we've seen, many of them are rigged. And they're like gambling, but not gambling. There's a lot of loopholes in this legislation that really needs to be worked out. So I'm assuming you can theoretically, but I think they mean, why can't I go to like the SIBO through Options Express, for example, and buy a call on the Pats? That's not really available right now, at least not in any sort of deep, liquid, listed market. And the reasons on this are many and varied, but right now it's just kind of prohibited. You can't really trade these types of event products. CFTC, SEC, others haven't really authorized them. There's no exchanges for them. Even though it would be awesome, I think there'd be a lot of action. I think it'd be a great way to get people into this space. It'd be really interesting to see the call skew on something like the Patriots going into a thing like the Super Bowl. I have a feeling it might be like the old Apple days, which would be interesting. I have to imagine these things would also be pretty illiquid at times too, which might be a little dangerous. But overall, I think it would be really interesting. I would love to see the day where we have a lot more than just listed equities and indices to trade, and of course commodities, but actual events. I think that would be fantastic. Nadex has some of that stuff now with their binaries, but even they're prohibited from going really deep into the deep end of elections and sporting events, which is it's a deep legal and regulatory morass that no one really wants to seem to go into, even though it's a shame, because I think it would be a big beneficial thing for a lot of people, just to get them into the product and used to it by trading something they may understand more than XYZ underlying. That said, we'll start with you, Uncle Mike. Let's mix it up a little bit here. What do you have to say to our friend Intuit? Would you be gobbling up Pat's calls ahead of the big day here?
Oh, of course, now that it's after the fact, I'll be a Monday morning quarterback. I'd have bet so much.
You would have bought them all right
but
at the end of the third quarter, right, when they were at their cheapest.
Of course, because Vol would have been so low. Yeah, so, no, I mean, you have the ability to bet on sports games and through Vegas, and you kind of have that if you're in Vegas and you go that route. So I don't know if I don't really see that ever becoming anything bigger than that. You never know, though. But one thing that's interesting, I don't know, is if Fantex is still around or not. Because I remember that was some big news a couple years ago. And what they were is you could actually invest, and it may or may not still be around, but I believe you could have invested into professional athletes. So in other words, that let's say you invested in whatever athlete wanted to go public with his brand, you could invest in him. And it was sanctioned by the SEC. So, I mean, it was definitely it wasn't. They had to go through all the bureaucratic red tape to get it up and running. I'm not sure if they're still around though. But like, if you were to invest in an athlete and then he becomes a great athlete and gets endorsement deals, then you're a part of that too, and you would benefit from that too. And like I said, I don't know if that's still around anymore, but that is one thing that I thought that was interesting, but I haven't heard much about it since, so I'm not sure if it's still going on or not. But in terms of for an event like a sports game, I'd prefer to have less betting in sports personally. I mean, I know it's kind of like a the sports book needs sports and sports need the sports book because that creates a lot of interest in professional sports. But just with all it's a line that you have to keep very thick, in that you don't want the gamblers to get involved in sports too much, but we just got to keep it safe along those lines. So I personally don't want any more gambling in sports than we already have, quite honestly.
So you're going pure, huh? You want the pure sports experience. I can see that. I could see a certain the gambling does influence things. I was just thinking more from a product entry point perspective. It might be interesting for some people because we get hit up with these questions all the time. Mr. Rock Lobster, by the way, we see you in the chat room there. What is it? Ed Huz. I don't think we have time to get to that on Chipotle. Maybe we'll get to that on Thursday's show. So we'll hold on to that one. But really quickly before we wrap up here, Mr. Rock Lobster, what do you think here on our previous question? What do we got here? Oh, Intuit. Why can't you trade options in the Super Bowl? And you're a New England guy now. Are you a Pats fan?
Well, my kids, that's all they know is the Patriots because you can't live in New England.
Yeah.
And it's the law. I mean,
tried growing up when I did, and you couldn't find a Pats jersey anywhere in the entire state of Connecticut. It was impossible. I can get all the Joe Montana stuff I wanted, no Pats stuff. Now I can go down to the corner Walgreens in Chicago and get a Tom Brady jersey for my kid. It's ridiculous. The Pats. As far as sports gambling goes, there's InBet. There's all kinds of places to do that stuff. There's sports futures. It's there. You just got to look around for it. You got to open up the secret account and, worry about if the feds are going to come and breathe down your throat or something like that. So it would be nice if they just kind of put it all into the open and made it transparent. But for some reason they have to feel like they have to regulate it or not have it. And it just makes people do it anyway. So I haven't quite saw the reason behind not doing it, but, I'm not a degenerate gambler, so I guess they're trying to save the degenerate gamblers somehow. I'm not quite sure exactly why, but I know there was a somewhat regulated attempt to do this. I believe it was Cantor Fitzgerald, not so much with the sports, but in like the Hollywood Stock Exchange type stuff, trying to make a movie exchange. I think Cantor Fitz actually went down the road of actually trying to get that launched, and then they ran into a bunch of legal and regulatory obstacles, and it kind of fell apart. And then, of course, we had the Hedge Street guys, who I think the remnants of them are now Nadex actually, so they have some background in the event derivative space. But still, yeah, it's a fraught with peril landscape. Even though I think it would be very attractive for a lot of our listeners. All right, we got to keep rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, that music means we've gassed on longer than we thought here on this episode. A lot to talk about today in an otherwise a quiet day. You guys hitting us up with your questions, your comments. But before we go, because that's what that music means, we're done. I'm going to have each of my cohorts jump in. They're going to do a combo around the block as well as what's coming up in their neck of the woods. Let's start with you, Mr. Rock Lobster. Hopefully you remember how to do this. What are you watching for the rest of this week if anything really is on your radar, as well as what's coming up in the land of the pit?
Really, I'm probably like Tucson. Can we get above 2,300? Earnings are done. They were pretty good. Are we going to have more of the same? I mean, you buying short-term premium, you're going to die at least the last couple days. So you got to be careful. So we'll see if the market can actually move again, because right now it's stuck in the mud. Option pit, we'll have our next Saturday class. It's probably going to be a boot camp. So that won't be a Saturday class, but our last one was very good. People liked it. And you'll be able to surf on over our website and buy it if you choose. And we have our Volatility Masterclass still going on, which is on Tuesdays every week for people that might be interested in signing up. And there you go.
And don't forget your trading long-term options webinar coming soon. to the
that
options
clearly
landscape.
is going to be happening now that I know that people might want it.
At least in the early voting. I'm curious to see how this plays out over the course of the entire week. I have a feeling that's going to shift. There's no way 80% of the people are choosing a month or longer in our results, but at least so far in the early voting, that is indeed the case. Interesting stuff. Uncle Mike, what are you watching the rest of this week, sir? And what is coming up in the land of going long in RCM Wealth Advisors?
SPX 2300. And in terms of what's coming up at this stage, go to Amazon and buy my book if you'd like. Go long, new option strategies for buy and hold investors. It's available on for your Kindle app with 2 new chapters on weekly options and portfolio margin. In terms of if you are interested in working with me as a self-directed trader or as an investor, probably going to be probably toward the last full week in February. I'm probably going to open that up again, but just thank you for all the business, folks. I really appreciate it, but just got to process some more stuff here, and I'll probably open things up again in another couple weeks.
Gotta love it. The man's just too busy for your business. It's too popular. But hit him up eventually, and he'll get around to you one of these days. M2SOT RCM FS to get on that much coveted waiting list. If you like Uncle Mike, you're going to hear him, I think, again later on this week on the Advisors Option. I believe it's coming up on Wednesday. I'm not sure if we're going to do that one live. You'll hear it on the network after the fact later this week. So stay tuned for that. A little more Uncle Mike if you can't get enough on this program. And we'll see you again for more Option Block on Thursday.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.